right, good morning everybody. How's everyone doing today? I should be coming through loud and clear, hopefully. So you guys all get settled in. Good morning, Dan. How's it going? All right, thank you. All right. Hey, Tawana. Nice to see you. Hi, Miles. Just going to do a quick review of what's happened already so far. Markets are getting ready to open here in about a minute or so. Our 9 a.m. crude oil trade plan, pretty active right out the gate. A small losing trade here, got long at 67.81, and then reverse course at 67.67, making for a real small target. A little tricky following the rules because we only want to get a 10 tick target, which would have been target 4. Went far enough to make a break-even trade. Then a trade just missed its target by 1 tick and then got ticked into the short here, and I guess not sure how quickly that would have moved, but kind of ugly to start, and then it took off, at least with this trade here. Have to look and see, did anyone take this short trade? Because sometimes when it just ticks in like this, it happens so fast that it is not a trade that can be executed. I'm just curious. John, how did you handle that one this morning? Just curious. But you could see kind of messy to start. All that was within the first couple minutes. And then it kind of gave a nice move here. Crude oil's been way down. Look at it, finally below 70, in the 60s. And after sorting itself out a bit, got some nice moves happening in crude now. Markets just opened. Really want to keep an eye on the Dowie Mini. This is a nice one to start the session with, typically. Right, that's what I thought too. Just a little messy to start, and then the nice moves happened after. Tiny bit out of sync this morning. Right, well, we'll be looking for our first trade of the morning here on the Dowie Mini, up here in the upper right-hand corner. And waiting our 4 minutes with the NQ with this custom Renko chart. This is a chart we've been keeping an eye on. Let's see how well it does. And then we have this counterpunch soybeans chart here. This one also starting at 8:30. Lower right corner. And here's the first trade of the morning. And soybeans again delivering the goods. We've seen this win like almost every session we look at it, but you can see it hitting its first target right there and borrowing the trailer on an earlier setup that the calculator is tracking. Soybeans again, one and done really quickly using counterpunch. And good morning to you, Armando. Pound Aussie is still flat. Soybeans just finished, stopping out at its trailer. while we wait for that Dowie mini setup, let's take a quick look at unleaded gas. Unleaded gas seems like it fared a bit better, although it did have this losing trade here right at the 9 o'clock start. Made a little, almost got to its money management and then flipped over to long right there, and then that one came up and hit a target, stopped out at money management, and then the third trade really was off and running, and that's the one where the money was made this morning. Unleaded gas taking 3 trades to get it done. Morning, Pamela. So far flat on the Dowie Mini. It's kind of unusual. All right, 4 minutes in. See how this NQ does here with this custom Renko. Short at 16,300. And the YM getting long really fast. As soon as I looked at the NQ, the YM jumping into a trade, and maybe too fast to execute, less than 5 seconds to the end of that bar there, so we'll just let that one go. Wait for the next one. Sometimes it happens too fast. But look at the NQ. The NQ gave a good chance to get short here and just got to its money management and pushing lower. That's waiting that, look at that. That's waiting that initial 4 minutes. A little bit of time in here to get into that trade, and then boom. And it just finished. So that one and done. Don't worry about the earlier stuff. I've got the automation set, but it's just doesn't have anything to do with actually waiting the 4 minutes. I need to probably change that. I'll do that now. Should start right at 8:34. Okay. All right, we'll wait and see if we can get a YM trade here. So later today, crude oil report. Could get another long setup on the YM. You got the blue bars above the yellow line here on the histogram, and if we get our exhaustion dots here, we may get a setup on this bar. Let's see what happens. All right, so this bar could be a setup. Get ready to go long. There it is, heads up. 34,696. And almost just hit its target. So if you can anticipate the setup, you make that trade and you're in and out really quick and done really fast. So it's one of those things where if you know the setup, you got your three dots, you need an up bar. And if you're quick, you can look at the low of that bar at 680 and anticipate the high 14 ticks higher at 694, and the entry 2 ticks above that. You can place your trade. And this is kind of advanced, but that's one of the things about range bars, is that you can anticipate where they will close and where the entry could be if you understand the strategy and where the setup bars are going to show up. And that's something you could practice. And I actually recommend that you practice doing that in a sim account till you're really good at it. Just practice seeing the setups before they happen, anticipating where the entries will be while a range bar is forming. Practice placing the trades before the range bar even finishes. Maybe you have to cancel and replace sometimes if the range of the bar changes, the higher the low. But it's something that if you want to become really good, you could practice that over and over again in a sim account. I've worked with traders that have just spent a lot of time perfecting that technique, and it's really paid off for them. Part of that would also be practicing putting in stop and reversals, canceling stop and reversals, replacing them again, on, off. Just you need to be able to do your maneuvers. And you want to set your monitors up in such a way that your order entry platform, whether it's a ladder, matrix, dome, chart trading, however you do it, you want it to be very efficient, minimal effort, where you can keep your eye on the chart and be very close to where you're placing your trades. You don't want your order entry to be 2 monitors over to the right, for example. You want it to be right there next to your chart so you can see it all in one place. You don't have to move your eyes. And then you practice it over and over again. It's our custom Renko chart we were just looking at, starting at 834. A really nice winner to start. The second trade also almost getting a target 4 before hitting its stop, just a little shy of that. Losing trade here, and then another nice winner, almost getting to target 3, just missing that. A chart like this takes some getting used to also. And I thought I would take a similar chart and put the same proportions and see how it looked on the Dowie Mini. The Dowie Mini, this is the micro. The volume on that's been going up and up and up. It's already at 87,000 contracts. It's nice to see these micros becoming very popular. Not sure if this is the right chart. I chose it because I could offset it by 1/3. If you have a 15 range, offset it by 5. Same proportion as that NQ chart. I'm not quite sure this is the right chart, or if the entries and stops are really appropriate, because I just copied the NQ chart. Just thought it would be fun to look at and see how it looked. And, you know, this kind of chart is going to give you explosive moves, but it's also prone for some consolidation, and that can get you into trouble. So figuring that out and figuring how to avoid some of the noise, some of the consolidation, not all of it. You never figure out how to avoid all of it, but if you can figure out how to avoid some of it and grab those big moves when they happen, that's one of the exciting things about a chart like this. It's just getting it right and figuring it out. I haven't really spent time with this. With the YM, again, I just copy and pasted the NQ, which we started to watch because it's shown some really good signs of potential. On Monday, I was showing you a options trade I was in, short on USO, using Counterpunch Trader. Yeah, I don't know why the automation has nothing to do with this chart there. So I was basically in this trade. And yesterday I was recording a video showing this, and right at the time I turned the recorder on and was showing it, this bar here was pushing down, hitting target 3, and my position exited at target 3 while I was recording. I've never had that happen before live on a swing trade. Plenty of times on a day trade, but on a swing trade where each bar is a day of trading, that was the first time I think that's ever happened. That was kind of cool. And that was 102%. 102% return just based on the cost of the option and the profit that resulted in hitting that target 3. So I think target 1 was like 45 or something, and target 2 was around 78%, I think, and then target 3 was like 102%. Really great. Nice trade. Really easy trade. And ironically, as soon as it got in, of course, it reacted up a little. It's pretty predictable. You have your action move down. You got your reaction that's about 1 to 2/3 of the action move. And then on Black Friday, I wasn't even in town. I was off the grid. Didn't even have a signal, an internet signal or a cell phone signal, which was nice to unplug. But when I got home, I saw this happen in one day on Black Friday. Both targets 1 and 2, and the conditional order I had in there just worked the way it always does. If the underlying symbol hits a certain price level, these targets, then sell however many options I tell it to, which it did. That was nice. And then Monday and yesterday, Tuesday. Doesn't get much better than that. Really easy. Video for USO. Well, I did a video showing this trade. I did a video earlier in the week showing the trade setup, where I talked about the setup, the options I'm taking. It was on this day. When I got filled on the entry, I did the video. I showed 2 trades. I showed this, and I showed a long trade on the Qs. You can see it. It's on this YouTube channel. You got to look past all the live trade room replays sometimes to find the other videos. So anyway, then a few days later, like I said, all this happened, and then yesterday I was going to talk about what happened on Black Friday, and while I was recording, the price started up in here, but by the time I got my recording underway and I was doing the video, the price was stabbing down and literally hitting the target live while I was recording the video. Someone wrote a nice script for that. CPT wins again, yeah. There are certain symbols that you want to trade options with because it just works so well. And you could build a list of symbols. If you just take your time, build it one by one. You want to get the scaling right because a $55 stock like USO is not the same as a $400+ stock like the Qs, right? Different scaling, different price range. So in that video I told you I did, you could see it here on this channel. I did it like, I think last week. Or when I was placing the USO short trade, I was also placing my Qs right here. So the Qs were going long. I bought February 396 calls, slightly in the money. See how the entry is 397.96? So I got 396 calls. And this one was successful. Not as successful as this trade. Obviously, this is way more. This one hit all its targets. Same with the additional setup in there. But this trade was able to crack through the top and go right up to target 1, almost target 2, not quite. And I had my conditional orders in there, so I didn't get filled obviously on target 2. It didn't hit target 2, but I did get filled on target 1, and that was a 33% gain in 2 days, right? I got filled 2 days later, 3 days later, because it was actually the red bar that hit it. 3 days later, 33%, and then moved my stop, and it stopped out with the rest of the position basically at break even. And that's how you manage those trades. So the Qs worked also. And it's, you know, the Qs, the SPY, USO, those would be my first 3 choices in building a list of symbols to trade with Counterpunch. Those 3, there are others, but I would start with those. They win a lot, and they have for years. Let me just look and see if I have a SPY. Yeah, this one actually lost. I did place that trade, and it didn't go nearly as far as the Qs, and that one stopped out. That was a losing trade. But here's the thing. It even gapped through the stop, so I didn't even get out at the stop. I got out where the bar opened right here because it's automatically set up that if the symbol is equal to or less than the stop, which I type in the number, then get me out of the trade, right? So it sold my options back, and I recovered some of it. I didn't lose all my money. I lost a percentage of it, but I'm buying options with enough time, and they still had quite a bit of value on them. And so when I say that a trade made 33% or 102% or whatever, that's based on the total cost of the option. In fact, it's a lot larger of a gain because we never hold the options to expiration where we would lose the whole amount. In this case, a losing trade lost a percentage of the option and recaptured some of it. So that adds up too. Even losing trades aren't total losses. And so the options contain your risk. The worst case is if you lose the whole option. If you just buy an option that doesn't have enough time on it and the trade takes too long, and then that, you know, you want to not do that. Spend more money and get an option that has a lot of time on it, because you'll get a lot of that money back. You'll make money if it wins, and you'll get a lot of the money back if it loses. So that's the level of my options sophistication. That's it. No more than that. I don't know much more, I know how to put on a vertical spread where if the option's too expensive, you could, a vertical spread is a directional trade where you limit your cost. You also limit your profit potential. But as a result, you could take advantage of the directional move of an expensive stock. So you could learn how to do a vertical spread on a real expensive option or stock like Amazon or whatever. Those options are expensive, right? So you could take advantage of those directional moves if you wanted using vertical spreads. They're, that's just more maneuvers, trades that take a little more effort. I'd like to keep it really simple. But look at the long trade here on SPY. This one wins a lot too. Look at how on that white trade, look where, at the right edge of the chart, you don't know what's going to happen next. And this happens. How many times have we seen that? Or on the left here, the purple trade. Look at where target 2 hits over to the right. Forget what happens after that, because when you don't know what's going to happen when this occurs, right? You just see it at the time. And then the trade within the trade, the green. So you have 2 trades, one's smaller, one's bigger, and both those targets are like dead on. Especially that green one. Look at target 3 over to the right. But target 2 on the purple one also. Those purple trades are nice. You couldn't have taken the purple trade. It gapped through and it never touched the entry. And then the green trade, that stop. I don't even know if this is the chart that's really tuned up to the spider the way I trade on my other computer. It looks like this is just a copy-paste from another chart. Because again, you have a $450 stock. In my opinion, you probably need an entry that's more than 2 pennies. I think I use like $2 or something like that. I don't know. I use a much bigger entry. This is not the spider chart that I use for trading. This is just a copy paste from another chart. But even so, it works for the most part. What kind of trade plans work best for bonds? Well, my trade plan for bonds is to not trade them. That's my trade plan for bonds. I just don't see the range. You've had historically low interest rates for as long as we can remember, well over 10 years. And there's no incentive for rates to go up. It would totally derail the economy. And the government wants inflation because they want to pay back all that debt with money that's worth a lot less in the future. Just think about the big picture common sense things. And then you got bonds that trade in these bizarre 16ths and 30 seconds and weird ticks and no range and no thank you. That's how I look at it. So that's my trade plan. I don't want to discourage you from chasing down your own ideas, but why mess with something like that when there are symbols that are just so easy? I don't know. For me, I want to reach up and grab the lowest hanging fruit, the fruit with the most juice, that's easy to reach, and satisfies me quickly. Does that make sense? However, you might see something you like. Maybe you can pick off a nice bond trade once a day or 3 times a week or whatever with a high percentage chance of winning. You got it worked out, whether it's with counterpunch or something else. And you could succeed with it as an additional type of thing to just add to your trading routine. But for me, I don't know. There's so many great choices. I just can't see myself giving it much attention. Yeah. I get a lot of people that are interested, and I'm always like, I remember the day. Like back when I started with NetPicks, I don't know, 100 years ago, the TY, the 10-year note, that thing was on fire. And then that dried up, and then the 30-year note all of a sudden took its place, the 30-year bonds, and that thing was just outstanding for a while. But, then interest rates went down, 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 and then stayed there. So bonds, of course, and any interest, debt type of instrument, 30-year bonds, 10-year notes, whatever, they're relying upon interest rates. And, you can't go much lower than zero. Yes, that's my view on it. If you guys would be so kind as to hit the like button for me, that always helps. How do you even pick a sector to trade? I rely on the 3-step sniff test. I mean, it works so well. The eyes don't lie. So when it comes to stocks, I want stocks with big volume, because then the options have low spreads and get filled instantly. If I'm the trade options, I don't want to sit around and wait to get filled and then pay a bunch of spread to the brokers and all that. Although, that could work if you got one that wins a lot. But for that reason, JDS, I would stick to think about the biggest names, think about the best ranges, and then you could use the beautiful thing about a strategy like Counterpunch Trader, for example, is that it's easy to see the trades. You see them right on the chart, and then you just do the sniff test. And really what you're looking at is just how many win versus how many lose, and can you avoid some noise with a few minor adjustments. Like if you see a lot of trades that are just barely triggering in and stopping out, and they're good-sized trades for the most part, you have a good-size stock with range, it's easy to push the entry out a little. You could even use Trade Assist automation to do some basic optimizing to get some high-level inputs, settings. And then you just go one by one. You don't have to be in a hurry. You want to think of this. Every symbol that you make work with a strategy like Counterpunch or Spotlight, don't have anything yet for Catapult. I think Counterpunch is probably the better choice, but Spotlight Diamond Level offers a lot of unique setups too. The Spotlight Gold with the major, the original Spotlight Power Trader setups, that works too, but you just don't get a lot of frequency. So for that reason, I prefer Counterpunch. But what I was going to say is take your time and build it one symbol at a time, because every symbol that you get right, every symbol that you can prove with my testing methods, fast testing and back testing, starting with maybe some optimization for some high-level answers and then UTA spreadsheet work, it is so worth it, because every symbol that you add to your list by putting it through the steps is a treasure map to future treasure for you. And you only need one. And then you get a second one. And a third. I don't care if it takes you 6 months to come up with 12 to 20 good ones. It is worth it. Every single one becomes a machine that fills your account with money if you do it right. So it's worth the effort. As far as sectors go, you could focus on sectors. I think if you're swing trading or day trading, I don't think you need to worry so much about diversification. That's more of an investment consideration, not a trading consideration, in my opinion. Kenneth Rigney, I've lost a lot of money in the 10-year note this year. Well, you know what the definition of insanity is, right, Kenneth? Don't keep doing the same thing and expect different results. Pamela, still have negative interest rates in Germany, Switzerland, Japan. Yeah, imagine that. John Ford liked. I love these sessions. Thanks. Thank you, John. I enjoy them myself. All right, it is 10:03 Eastern Standard Time. In a few minutes, I'm going to have to shut this down so I could reopen it for the crude oil report. So get your questions together. We could look at a few more things. But I will be back in a moment. So think about anything you want to ask me. I'll be back shortly. Hey, Dan. So there are a lot. I think that you will easily be able to get a list of 12, 20, 30, however active you want to be, but just build it slowly one by one. And the three that I think you could start with a lot of confidence, just knowing already how well they've worked over the years, would be the QQQ, the SPY, and USO. Those three. There are plenty others. And as we go forward, I'll come up with some others and just show you. All right, in the meantime, I should point out to you that the pound Aussie got short and is one and done today, hitting its first three targets for 11, 17, and 24 pips. So that's always good news for our Forex traders in the house. This one continues to just deliver the goods. This has been a long-running plan. So it's really easy to see with counterpunch, and sometimes you have to look, you have to use your imagination a little, because remember, the range in stocks vary, so the scaling varies. And so you can't just think that one shoe fits all feet. You have to, get the inputs right, and that's the good news, is if you tune up the chart a little bit, you'll get better results. But if you just copy paste, you should be able to see the trades right away. They should just jump out at you. And if you think about it, with stock market trading in general, most of the time your long trades will outperform your short trades, because we've just been on this massive inflationary bull cycle for years and years, right? Just going up and up and up with no end in sight. So you have to remember, there are short trades. They're just not going to be as efficient or as profitable over time, at least for now. Who knows when that changes? Maybe it's going to change soon. But let me give you an example. I'm getting to where I have to shut this down. I got a few more minutes. I want to get ready for the crude report. But let me just take this Q chart and let's try a few things. I'm going to copy it, paste it. This just has the 2 penny entry, right? Definitely not appropriate for a $400 stock. And yet you could still see some pretty good looking trades there just right away. And if you go backwards, which is usually how I do it, you just keep seeing a lot of winners. Every now and then you see a loser. But you basically see a lot of winners, right? And then you could also put on the trend mode indicator, which helps filter out some bad trades where when it's blue, you only go long. You don't go short if it's blue, and vice versa. If it's red, you only go short. And that could also make a huge difference. The Counterpunch Trader, the full version, gives you trend mode and hybrid mode. For example, that's a losing trade right there. And then again, some trades lose. You don't want to try to avoid all losing trades, because then you start avoiding winners. You just want to win more than you lose. But if you were to buy a put here, say a 312, slightly in the money, you flip over to long, how much are you really losing? You're only losing this small amount. Your option 2 days later has a ton of value on it. You sell it back and you take a small haircut and pick up a big move to the upside. So that's the kind of thing you need to think about. And again, that's a 2 penny entry. I don't know if that's appropriate for the Qs. I don't think it is. But the automation could certainly give you some answers. So now let's just change the symbol. And this is how you start looking for stuff. If you have stocks that interest you, look at those first. Some of the ETFs, the big sector ETFs, financials, energy, XLF, XLR, or XLE, retail, emerging markets, whatever. The big ones that trade in tens of millions. What about something like legacy, old world? How about Ford? F. Oh, wow, look at that. I'm looking at it. This is part of the sniff test, right? What do I see when I change the symbol? I see winners after winners. Of course, it went way up. Short trade obviously losing in the face of a bull market. Ford was down to $4 a share. And I only have green trades on this chart, by the way. Notice that you don't see any white or purple, so that's another consideration. Maybe you make it simple and you look for specific setups. You might look for green trades only, like the first one after a reversal, or the first two, or who knows. I mean, there's so many approaches. You have to think a little bit out of the box and be creative. But this is what I mean by moving the entry down a little. See how that barely triggers in and then stops out with a 2 penny entry? Maybe, that's a day trade entry. Is that really a swing trade entry? I don't know. 1204, that's a key level at $12. I mean, it stabs down to 1202, literally hit the entry exactly. But that's what I mean by how you can clean up the chart. Give it a little more space on the entry and you avoid that trade, for example. But you can see the winners, right? So that's how you start. Trust your eyes. How about another old world, not very sexy chart? I mean, look at the volume, first of all, 28 million. That's what you want, right? And if you have a low-cost stock at $20 a share, I mean, you could load up the truck with options. The options are going to be super cheap. What about Macy's? M. I mean, you got COVID and everyone at home and no one filling the stores, people staying home, but their online business went through the roof. So for me, I talked about this months ago. It made sense that if Macy's is killing it online, imagine when people start coming back to the stores. And their stock was way undervalued. And you could just see some explosive moves. Again, a chart that's not tuned up. Just a cut and paste, copy paste. Look at the short there too. Almost a perfect target. Remember, these are just green trades. Again, here's where you avoid trades with a slightly larger entry. You can clean up the noise a little. You don't need to avoid all losing trades. You're just looking to improve a little bit. You don't want to try to curve fit. You just look and see how much noise is on this chart and how do I clean it up. Push the entry out a little. Push the stop down a little. All right, one more. I'll let whoever types in a symbol first. We'll take a look at it. We can always continue this conversation anytime. That's why I do the trade room. Give me a symbol. We'll look at it, and then I'll shut this down, and we'll get ready for crude oil. Anybody? Maybe there's a bit of a delay here. FCX. Thank you, Pamela. I don't even know what that is. FCX. Oops. X. All right, so this is Freeport McMoran Incorporated. I know that's an abbreviation. Freeport. 3 million shares. I mean, that's passable. So I'm just trying to see where the money management is. I don't understand. Oh, I see, because this trade gapped through. See, again, the 2-cent entry may not be appropriate. So if it was a slightly bigger entry, it gets filled here on this bar, and then you don't get the little bar. You see? This is what you want to look at. And then you have a perfect target 2 or nearly perfect target 2. So that's what I mean by trying to tune things up. Lots of gaps, but again, here's another short that if you had a slightly larger entry, you would have been able to catch it. And a chart like this might require, well, I don't know. I mean, it looks pretty good, actually. Look at that perfect target 2 right there. Anytime you're trading down from the 50 to the 200 moving average, you have a pretty good chance of doing well. Oh yeah, Freeport, okay. Copper. But remember our techniques with filters and the squeeze zone and following the yellow brick road, and you got the 50 above pushing down to the 200. That 200 moving average is there for a reason, and the stock, if you have a target that's targeting right around that 200 moving average, you're probably going to, you got better odds that that's going to succeed. So you could see some nice trades in this. This could work. I would just test it out and put it through the ringer. Look at this perfect target 2 right there. I mean, counterpunch is amazing if you understand it. By the way, that would have been a spotlight trade off the 50 moving average also. Spotlight trade. All right, so there's a good one. So I'm going to shut this down now. You guys can just come right back in. I got to get set up for the crude oil report. So thanks a lot for the great interaction and conversation, etc. Is there a difference between counterpunch and CPX2? Yeah, well, the setups are based on the same principles or the same setups, but Counterpunch Trader has more tools. Has things like key level adjustments. It has your average true range formula for a more dynamic entry and stop that you can use. It has a trade assist automation, which CPX2 does not. It has trend mode, hybrid mode, and a number of other tools. So Counterpunch Trader is just a fatter, thicker set of tools, which for stocks and options I think is good because you can do a lot more with it. The pound yen 4-hour chart that you've seen me talk about over the years uses some of those advanced tools, and that trade plan has won 85% of its trades for like the last 16 years straight, using advanced tools that are not found in Counterpunch Express 2. So Counterpunch Express 2 is the entry level to Counterpunch Trader. It's the best way to explain it. And yet it's still a rock solid, powerful strategy for the cost of a ham sandwich. So, all right, maybe a few ham sandwiches, but still a sushi dinner for 2 if you go out with me and let me order. All right, guys, see you in a few. I'll be back here in about 7 minutes.